We try to bring you high-quality educational and informational content every single day. Why do you think the price is having such an anemic time? The news story of the hour. Jump onto the chart. Is this the beginning of a massive financial unraveling? We gotta add a little addendum to the show map today. So we start here on the daily. Now, we've been looking at the RSI on Bitcoin's daily chart for the last several days. It always has been, but it's been increasing over the last 50 years since the government. Hey guys, what's going on? Jeb here, and welcome back to Coffee and Crypto Live. This is your week daily morning show where we bring you the latest and everything Bitcoin and cryptocurrency. And in today's episode, we are going to be talking about a major movement that will be coming to Bitcoin within just the next 4 hours. You see, about every 45 days, the Federal Open Market Committee of the Federal Reserve meets to discuss interest rates, and we are going to see an update to the effective federal funds rate, and we're going to see whether or not it is going to hike. At this point, it seems that they may be hiking the EFFR, so we're going to be talking about how that will impact the Bitcoin and the cryptocurrency markets as of today. I'm very excited to bring you today's stream, guys. Very, very excited about where the channel is going, about where cryptocurrency is going, and about where you are going in your life. So excited for a couple of announcements and launches that are going to be taking place over the next couple of weeks. One of them I'm hoping to have out this Friday. We will see. I can't guarantee anything. Things are still in the beta phase, but I'm excited to share some of the things I've been working on behind the scenes with you guys over the last month and change, and just really excited to be here. So let's go ahead and read some chat. Thank you guys so very much for tuning in. Alex Nibo said good morning. Thomas Lavrikaitis said, hey, what's up, Thomas? Wreck the Bear says, saw, dude. I guess that's what he was saying. I don't speak that way, but I know that I think I've heard people have said that to me before. You know, I remember one time. Let me just wrap myself out here. It was at my first job. I was working as I worked at a bookstore in college. I was actually dual enrolled. And this guy walked up to me, and he said, "Hey, bro, what's up?" And he wanted to, whatever they call it, dab me up or something. I'm like, how you doing? I felt like, for any of you guys that are my age, I felt like SpongeBob SquarePants when he was normal, when he had no holes and he was like round. That's what I felt like in that moment, because I was like, hi, how are you doing? And I had no idea what to do. So that day I learned how to do whatever that thing's called. And so ever since then, I've been cool. So thank you so very much for joining me, joining Cool Jeb today. Tim Pierce is in chat, said, good morning, everyone. Grand Roofing Incorporated in chat. Thomas Post in chat. Brecht is in chat. Damon Bosolil is in chat. Sean O'Brien's in chat. Crypto Surge, Philly Skills 1428. Let me just read all of them. Johnny A, Patrick Power, Joe Bollier, Benny Barry, Patrick Power again, Pheno, Patrick Power a third time, and Richard Harrington. Good to see all of you. Really appreciate you tuning in. Let's go ahead and jump on over to a very important screen. This is the CME Fed Watch tool. It shows up on CMEgroup.com. I'll go ahead and put the link in the chat so that you guys can see it. Actually, I'll just type it in. Type in CME Group Fed Watch tool into Google, and you will find this as the first result. CME is the Chicago Mercantile Exchange, one of the largest exchange companies in the world, and they track the Federal Open Market Committee meetings. The next one will be happening at 2 p.m. this evening, and then this afternoon, and then half an hour later will be we will see the press release from Federal Reserve Chairman Jerome Powell. As you can see, there's currently a 96.5% likelihood coming out of CME that we're going to see the range move to 5.25 to 5.5. If you'll remember, we talked about the history of this, and we can actually see the historical over here. There's been quite an increase in the percentage likelihood that they've been sharing that we will see that 5.25 to 5.5% movement, and now it is overwhelmingly likely in the eyes of CME themselves. If we look over here on the 14th of June, we saw that it came very, very close to 5.25. That's what ended up happening. Now they're predicting that there may very well be a hike. And if we go on over to the Trading View, then we're going to see the current effective federal funds rate is sitting on Trading View at 5.08%. If you read was it the press release or the minutes? I forget which document it was in, but they released two different documents. In one of the documents, they outlined the exact number. The exact number right now is 5.15. And so it's likely at this point that may jump a quarter of a percentage, 25 basis points up to 5.4%. And if that happens, that would be I think it would be the 14th rate hike since we began hiking rates in quarter one, beginning of quarter two last year. This has been one of the most aggressive rate hiking cycles that the United States Federal Reserve has ever embarked upon. You can see here on the weekly chart, looking at the last 20 years of data, the Federal Reserve hiked rates from 1% all the way up to 5% in the 2000s, here between about 2004 to 2007. First of all, that took longer. Second of all, it didn't move as far. We also saw the same thing happen here in November of 2015, where we began hiking rates from near zero to about 2 1/3. That was a movement that would take place over the span of about 4 years. Again, this was a much longer movement than what we've seen this time. In this case, we've seen a multitude of movements, again, over a dozen rate hikes from near zero all the way to 5.08, it says here on TradingView. But again, as I said, the actual the technical number is 5.15%. That's the exact target that the effective federal funds rate has set for overnight banking transfers and the effective federal funds rate at large. So let's talk about what that means. Again, if we're going to do any kind of analysis on something, if we're going to do any investment on Bitcoin, we talked about the 3 Ps yesterday. And if you did not watch Monday's stream and yesterday's stream, I would highly encourage you guys to go and watch both of those streams, because I'm very happy with how both of them turned out. On Monday, I just spoke extensively about the market, where it is, where I think it's going, and I talked a lot about financial sovereignty. Yesterday, we discussed what I call the 3 Ps of trading and investing. Those are as follows. You must first perceive the market, then you must predict what the market is going to do, and then you can plan what you're going to do about the market moving in those different directions that you predicted may actually take place. So the first thing we have to do is we have to kind of perceive what's going on right now with the effective federal funds rate. Then we can make a prediction about what the market's going to do, and then we can make a plan for how we can prepare for both of those movements, both of those options, either moving up or down, and whatever likelihood each one of those brings towards the here in about 15 minutes or so after I've gone through those steps. Again, this is going to sound repetitive. You're going to start saying, Jeb, it means you just seem like you're always going through the 3 Ps. I am, because my goal is to vastly simplify the field of technical analysis, trading, investing, and financial sovereignty, because people have made it so dang complicated. I was talking to a real estate agent friend of mine on Monday, and he made a very good point. He said, people just make things so complicated, and it doesn't have to be that complicated. He was talking about his journey in real estate when he started with Keller Williams, and I'm sure he wouldn't mind me telling just this story just from kind of a vague 30,000-foot view. He tells this to a lot of people. He started at Keller Williams, and they told him, hey, if you want to be a successful real estate agent, do this, do this, do this, do this, and do this, and do it over and over again, and eventually you'll make a lot of money. This is the formula. Do this, you will succeed, period. It's not complicated. There's a lot that goes into it. If you're a real estate agent, you got to figure out all the... I'm not a real estate agent, so forgive me if I say the wrong thing here, but you got to figure out all the documents. You got to figure out all the inspections. You got to figure out all the open houses. You have to figure out how to prospect. You have to figure out how to keep track of all of your different points of contact. You have to figure out how to bring all the pieces together to move somebody through the pipeline of being an interested buyer or seller into actually closing a deal and making commission. So that can be a very complicated process. Keller Williams and many other brokerages, Keller Williams being the largest brokerage on the planet, they basically just say, here's how you do it. Here are the 13, 15, 17, 5, whatever, however many steps you go through. You do this, 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 and this, all the while doing that and that. Oh, and don't forget this thing. And if you do all of those things and you multiply it by hard work and time and prayer, you will be successful with like a 98% likelihood, because a million people have done it before you and they've all been successful. So why can't you? You're no different. You're not dumber than everybody. You're not. You're a regular person. You, me, regular people. We can go through the exact same process and we can be successful. It's my dream to build that process, because I don't see it existing anywhere in cryptocurrency, technical analysis, trading, or investing. I see it very complicated everywhere. It's my dream to vastly simplify it, so I can say, do this, then do that, then do this while doing that, and don't forget this, and keep this in mind. And if you do all these things and you multiply by hard work, time, and prayer, you will be successful. So that is where the 3 Ps come in. Let's first perceive what's going on. Backing up, what is the effective federal funds rate? The effective federal funds rate is the base rate that the entire United States economy bases its credit system off of. I'm not the biggest fan of debt. I don't think it's sin. The Bible doesn't say that, but I do think it is something that you should try to avoid. One of the principles that we teach in financial sovereignty is do your very best to get out of financial debt, and also do your very best to get out of spiritual debt. If you feel that you are indebted to somebody and you owe somebody an apology, go and give it to them. Get out of debt. Leave the bad parts of your past behind, financially, relationally, emotionally, spiritually, health-wise, whatever it is. Get out of it. You've got different bondages that you have either set up for yourself in your past or that have been imposed upon you in your past. Get out of them. Be free from those debts. That is a principle. And so when we perceive what is going on in the United States economy, we can perceive that debt is a very common thing in the United States economy. It's actually one of the most important parts of the market. Queen says it all the time in chat. The debt market drives just about everything, and that could not be farther from the truth. That could not be closer to the truth. That's absolutely true. The debt market drives the vast majority of things. And so when you manipulate the interest rate, which is an invariably important part of debt, then you're naturally going to manipulate the debt market, and with the debt market being tied into just about everything. And when I say debt, I literally just mean anything where one person lends money to another person and they charge interest. Any kind of scenario where that occurs, whether that be a business line of credit, a HELOC, a mortgage, a credit card, a car loan, a student loan, you name it. That's what I mean when I say any kind of market revolving around debt. All of those interest rates, in one way or another, are eventually tied back to the effective federal funds rate. So when the effective federal funds rate goes up, you can bet your bottom Bitcoin that you're going to see the rest of the interest rates in the United States market go up as well. When that effective federal funds rate goes down, you can bet your bottom Satoshi that every single other interest rate is probably, and this isn't as certain because obviously higher interest rates are more profitable for the lender, but theoretically, they're going to come down because the lenders then can compete against each other for the lowest interest rate, and it becomes a battle. It becomes a competition to see who can serve their customer the best, to get the most clients, to grow their business the largest, because, of course, this is capitalism, and don't we love it? So the effective federal funds rate is the basis of pretty much all kinds of debt in the United States and how it is charged, how the interest is charged on it. And so the change thereof impacts everything, especially business expansion. And this is one of the most important parts of the United States economy, because right now we're undergoing one of the largest reindustrialization pushes that the states have gone under in a century. I almost said a decade, in a century. The amount of industrial onshoring that we are seeing happen is insane. The amount of offshoring that took place ever since the VE Day, Victory in Europe Day, post-World War II era, and especially the amount of offshoring that took place post Iron Curtain collapse in 1991 and 92. All of that offshoring, much of it is being onshored, not this time in the span of 30 to 70 years, but this time in the span of 3 to 7 years. The amount of industrialization going on right now in the States is absolutely meteoric, and that is naturally going to cause inflation. The interest rate impacts how quickly that can occur. And so the Fed is manipulating interest rates to try and control the strength of the United States dollar for a plethora of reasons, but it does have an impact on the economy, normally to the negative in the short term when the interest rates go up. They're trying to raise the interest rates for the sake of maintaining a strong dollar for reasons we've talked about in another stream, but I'll just kind of rattle them off really quickly. To maintain a strong dollar against the pariah state, which is Russia at this point, to maintain a strong dollar against China, to maintain the United States' economic hold over of the Chinese and Taiwanese, basically Cold War going on over there. A strong dollar helps to maintain the United States' position in that cold conflict as the mediator of sorts, as the one in ultimate control over it. The United States is also the effective federal funds rate. The Federal Reserve is also attempting to control the effective federal funds rate for the sake of controlling inflation, because we want a strong dollar for economic growth in the long term back home. And we also have this whole little headline of de-dollarization going around, and people are worried, oh my gosh, the United States dollar is going away. Newsflash, the United States dollar is not going anywhere. Bet on it. You got 10 years, almost guaranteed, where the dollar is going nowhere. A lot can happen in 10 years, but unless nukes go off, super volcanoes erupt, or the world's largest tsunami hits the States or something like that, we're talking apocalyptic, act of God kind of territory. The United States dollar is not going to cease to be the world reserve currency for a very long time. So that's what's happening. Again, we're in this perception phase, the first of the 3 steps of how we invest and make profit in the movement that will probably come in 4 hours. So we perceive what the effective federal funds rate is. While we're here, let's also perceive how it impacts the Bitcoin market. If we go to the effective federal funds rate chart on TradingView, and then we plot BTC over USD over it, you're going to see that Bitcoin has not done very well for itself during the time that the rate hikes have been occurring. You can see the first rate hike occurred here about the Ides of March 2022. This is about 14, 15 months ago. And ever since then, Bitcoin has been in a heavy, heavy slump. If we also add the United States Central Bank balance sheet, USC BBS, this is the balance sheet for the United States, you can see it's been coming down right around that same time. I've made videos on this in the past. I would encourage you to go back and watch these videos because the correlation between these charts is actually very important. You can find those charts on the channel. One of them is called The Fed's Plan to Burn $9 trillion. And the other one, I believe, has Jerome Powell on the thumbnail. It's one of the first videos that we made in the Climate of Crypto series, so go back and watch those. Both of these charts moving in the way that they are, USC BBS, that's the United States Central Bank balance sheet. That's essentially the amount of debt that the United States Federal Reserve has, the United States Federal Reserve and the Treasury have taken out to fund economic expansion and post-pandemic. I still can't say that on YouTube because YouTube does not want me to talk about that. This is the debt they took out to try and quote unquote rebuild the economy with that. Didn't do such a great job, but we could argue about that all day long. Anyway, these two charts have led to the suppression of Bitcoin. When you hike the effective federal funds rate, especially considering the last decision was a pause, you're going to see a heavy impact on Bitcoin. We'll talk about what kind of impact that's going to have on Bitcoin here in the next step, which we're going to go ahead and jump into right now. So let's talk about the plan. The perception is that Bitcoin is currently about to see in 3.5 hours the effective federal funds rate most likely go through a hike. And in fact, there's even one or two people over here in the CME group that seem to think that they'll move it by 50 basis points. I'm not in that boat. I think it's going to move by 25. And there was a part of me that thought that they might pause it, but it actually makes sense that they wouldn't because Jerome Powell spoke about, sorry for showing the intro there for a second. Jerome Powell talked about how there are multiple people on the council that are very hawkish and they want the interest rate to go to 6% or higher and get inflation heavily under control. If you'll remember, the Bureau of Labor Statistics has shown us, bls.gov/CPI. The BLS has shown us that core inflation has... Well, isn't that funny? Here, I just got to show you this really quickly. This is the government for you. This website, I tried to go to bls.gov/CPI, and it says this website may be impersonating bls.gov to steal your personal or financial data. No. Safari, you got it all wrong. That's not the Bureau of Labor Statistics. That's the IRS. Here we go. Anyway, moving on to what I was talking about here. The reason that I wanted to show you the BLS is because all items less food and energy is still at 4.8%. Year and change ago, it was at like 5.9%. It's gone down to 1% in a year. So it kind of makes sense that there's people that are hawkish at the Fed because they're trying to get core inflation under control. Headline inflation is down to 3% because energy has fallen straight through the floor because of the growth of the United States petrochemical and especially the fracking industry with natural gas. So energy has dropped through the floor because the United States has become one of the largest exporters of petrochemicals again, globally, and we have more or less achieved energy independence when it comes to petrochemicals, when it comes to petrochem. There's a huge amount of build-out going on all over the country, especially in Texas and Alaska and some other territories up in some of the basins up in the Northwest. So the Fed wants to get that core inflation under control, even if headline inflation isn't. So it kind of makes sense that they want to raise interest rates even farther. And I also talked about this concept that the Fed does not want to go through 2 hiking cycles. They want to get all the hiking done in one cycle. We're still in the first hiking cycle, so they can pause it and then drop it in a couple of years. That's what they've always done. They have hiked the effective federal funds rate, and then they've paused it, and then they've dropped it, and then they normally didn't hike it again for nearly a decade. They hiked the interest rates here in 04 through 06, did it for 2 years, hiked between 15 and 18, 2015, 2018, about 3 years worth of hiking here. And they're kind of doing the same thing here. They want to get all the hiking out of the way at once, and they've already hiked it farther in less time than they have in the last 40 years. Last time they hiked rates this aggressively was in the 70s, early 80s. And so if they're going to do more hiking, they want to get it out of the way now so they don't, how shall I say this politely, so they don't tick off the American people too much, because the American people are about done with these interest rate hikes, making their mortgages harder and locking them even further into a mortgage that they can't afford, because if they wanted to sell their house and buy another house, they'd have to buy half as much house and still have the same monthly payment. Good reason not to use debt if you can avoid it. I understand it's kind of difficult to buy your first house without debt, but good reason to avoid it in the first place. So how does that impact Bitcoin? Let's jump on to Bitcoin. As we've seen throughout history, and I will spare you the details of going through every single rate hike, but typically when a rate hike occurs, you will see one of two things happen. You will see the market rally if it's a pause, or you'll see Bitcoin trade sideways or kind of drop if it's a hike. Now, it also depends on what kind of hike it is. If the hike went from 50 basis points last month to 25 basis points this month, then what you're likely to see happen is you're likely to see the market actually jump on that because the rate of hiking slowed down. The rate of change decreased. And so when that happens, Bitcoin's actually done relatively well. Right now, we saw a pause last meeting. This meeting, we're likely going to see a hike. So that's probably not going to be the case in this case, because in a way, if you look at it from just those two data points, this is actually an acceleration on their rate hiking. If you look at it from the long-term perspective, that's not what they're doing. It's very clear from the long-term perspective what they're up to here. They have gone through doing 75 basis points, or excuse me, they did 25 basis points, then they did 50 basis points, then they did 75, 75, 75, 75, 75. I may have said that one too many times. Then they did 50, then they did 25, 25, 25. Now they're doing 25 pause, 25 pause, 25 pause. So effectively, no pun intended, they're hiking it by 12.5 basis points every month or every meeting. So every 90 days. Excuse me, every 45 days. So it's 25 basis points every 90 days. And they're slowing down the rate of hiking. In the short term, that's not going to feel that way because it's going to feel like, wait a minute, we had a pause last meeting and now we have a hike this meeting. So hopefully the investors can keep in mind that this is still a gradual slowdown. It seems that the Fed may want to raise the interest rates potentially even another 0.75%, including the 0.25% that we're going to see today. But it is a slowdown. The strategy has gone from 0.25% every 45 days to 0.25% every other meeting, which is half as fast. So how does that impact the Bitcoin market? We're going to have to kind of wait and see a little bit of that today. It's going to be difficult to very accurately predict which direction the market's going to go when we run into the fact that we have not seen the effective federal funds rate do this whole pause, hike, back and forth strategy that it seems that they're about to undergo in recorded history that I can find since Bitcoin has been created. We haven't seen it happen. This is uncharted territory. So it's going to be a little bit more difficult to make accurate predictions in the prediction phase. Remember, though, the predictions are kind of useless other than for giving us context on where we should put our planning. Remember the 3 Ps. Perceive. Understand the market. The first thing you do when you process an issue is you identify it. When I help people go through processing issues, we do 3 things. We say that we identify things, we discuss things, and then we solve them. Similarly, in cryptocurrency, that's IDS for issues processing. In investment, I like to use the 3 Ps. We perceive it. It's the same thing as identify. I just use the word perceive because it makes it alliterative. Makes it easier to remember as a mnemonic. We perceive what's going on in the space. We've already done that. Then we predict what's the market going to do. And then with those predictions, that informs how much work we put into each one of our plans. But the point is not the prediction. The point is the plan, because the plan is what you're actually going to go and use when you trade. Ultimately, you're not trading a prediction. You're making a plan based off of a prediction and trading the plan. Hopefully you see the difference there. So even if we don't have enough context historically to make a very accurate prediction of where the market's going to go, we can at least understand the impactor on the market, and we can at least understand where the market will probably go so that we can make as good a plan as possible. Hopefully that's helpful. So when we make our prediction here, the first thing I'm going to point out is that Bitcoin has not moved much at all in the last 24 hours. So what we talked about yesterday is still going to be relevant here. And by the way, if you look down on the hourly chart here, this entry right here, this entry would have needed to move up because we talked about this entry would be above this uptrending level of support. So by the time we had this level get hit right there, this would have been an entry if it had have happened at 1400 hours on Tuesday. I would not have recommended it being an entry if you had have hit this level of 29,370 at 2300 hours, that being 11 p.m. last night. I would have recommended that entry actually be somewhere closer to here, like 29.4, because the breakout, the prediction we were making yesterday, the plan we had yesterday was to adjust this trade entry based on whether we broke this uptrending level of support. We did not, so I would not have entered right here. Just keep that in mind. That's where you have to adjust your plans. I believe it was Dwight D. Eisenhower, who was a 5-star general in the Second World War. He said, and of course the President of the United States after the Second World War, he said, plans are useless, but planning is invaluable. And by making a plan and by being willing to adjust it on the fly, you then have a model that you can go by when you get into the heat of combat, when you get into the thick of the market and it's moving fast and you got to make a choice. You at least have something to go off of. It is far easier to adjust a plan than it is to make one from scratch, especially if it is something that requires an extremely complicated plan. It's much easier to adjust 13 points of a 500-point plan than it is to make a 500-point plan. Make the plan when things are peaceful so that when it hits the fan, when things are moving very quickly, and when you're in the heat of battle, when you've got the fog of war right there, you've already got a plan you can fall back on, and it is just your job in that moment to adjust and tweak so that it fits whatever it is that you're doing. The plan that we outlined yesterday was to wait until we break above that uptrending level of support. We didn't do that, so I hope you didn't take that entry right here on this candlestick. Bitcoin is still very clearly in sideways momentum right now, and we can just adjust this bottom trend line to show that ever so slightly right here. We are in a bit of a megaphone pattern, I'd say. We are having a tiny bit of volatility come in basically on these higher wicks, but the bears are getting rejected pretty hard, as you can see by these high wicks. In essence, Bitcoin is still trading sideways, and everything we said yesterday is still in play. We don't need to do much technical analysis on Bitcoin today because everything I said yesterday is basically the exact same thing. Bitcoin is quite bearish right now, although it is showing some signs of hope. One of the things that does bring me hope is that even though the bulls are getting rejected hard by these by these wicks, they are still at least attempting to break to the upside, and these long green candlesticks that happen right after a big grind down by the bears indicate that there is this kind of pent up exuberance that the bulls are showing, but they are still in their cage. They've not been let out into the bullpen yet. And so when they do, Bitcoin will probably run. But at the moment, the prediction I would give is that Bitcoin is still more bearish than it was, more bearish than bullish. Although my prediction may change just a little bit based on these three candles. This one right here and these two right here. Does give me a little bit of hope that the bulls are being suppressed, but they are still strong. The bears are just having their day. So regardless, again, the prediction is actually not really all that important. What is important, it is important for entertainment value, and it is useful to test your skills. But it's a little bit like doing a max test at the gym. You don't want to do it every single day, and you don't want to base whether you're progressing fully on that. You want to base it on a full range of things, and really what you base your success in cryptocurrency on is whether or not your plans work and whether or not you actually make money. So, perception's done. What's the prediction here? I'm going to tell you when I don't know something. I'm going to tell you when I'm not sure about something, because I think that's a very important thing for somebody who's in a teaching position to do. I'm going to tell you right now that we do not have enough information in this market to make a very clear, educated prediction about what kind of impact a 25 basis point rate hike will have on Bitcoin after we did not have a rate hike in the last meeting. We don't have precedence for that. It's a little bit like the XRP case. It's one of the reasons it took so long. There was no precedence. They had to kind of make this up on the fly. It's similar to what I talked about with the plan. If you have a precedence, you can tweak and adjust and apply that precedent to your current case, and then it's easier to adjudicate. If you're the judge, that's the word, adjudicate the case, because you have precedence to go off of. XRP had basically none. No precedence whatsoever, because a cryptocurrency that large never been brought to trial for being an unregistered security. We don't have precedence for how Bitcoin responds in this scenario. So we have to make an initial prediction without a history. And that's a very difficult thing to do. And so if you find yourself in this position, as I find myself in right now, you have to first start with a dose of meekness and humility and be okay with not being in control. One of the things that we talk about quite a lot here with financial sovereignty is that being in financial sovereignty means to subdue the creation that has been brought into your sphere of influence with meekness. And meekness means not weakness. A lot of people hear the word meekness and they think, oh, that means weakness. And apologies if you can hear next door. They're having a party right next door. I want to be over there. No, I'm kidding. I want to be right here. But meekness means being okay with not being in control, because you know God's in control and he's going to direct your steps. And even if you're not a Christian, you can embody meekness by being okay with not being in control, because you know, or you at least choose to believe, that things are going to work out. You can have a dose of meekness here by saying, not exactly sure which direction this is going to move the market, but I can have faith and have hope in the fact that whichever direction it moves, I'm going to have a plan ready. So there you go. With that in mind, I'm going to pretty much fall back on the predictions that I made yesterday. More likely than not, I think Bitcoin's going to fall to the downside. on this news, and I think it was going to do that anyway. But there is a pretty strong chance it could break to the upside. Again, I gave it like a 10 to 15% chance that it trades sideways for over a week. I think Bitcoin will have a breakout within the next week, so let's not even worry about the sideways movement. I think that Bitcoin is more than likely going to break to the downside. I'll give this, based on my experience, this is where you kind of have to lean on your gut, because this is not a, we're not making these predictions based on some kind of mathematical model. I'm going to say I give it about a 65% chance we break down. I'm also going to give it about a 35% chance that we break up. You'll notice that that is a slightly different ratio than what we saw yesterday. Yesterday, I had a slightly higher likelihood that we were going to break down than I did to the upside, even more so. It would have been like 60-40 if not for that 10% that I threw in there in that calculation yesterday. And part of the reason for that, again, is because I'm able to go off of a plan, off of a perception, off of an understanding that I had yesterday, and I can adjust and tweak it a little bit. And the reason I say I'm a little bit more bullish today than I was yesterday is because I've seen this candlestick, these two candlesticks, I've seen that wick high, I've seen that wick high, I have technically seen higher highs, I've technically seen higher lows. So I'm a little bit more bullish than I was yesterday. I'm moving in that direction. Not there yet. I'm not on the camp of the bulls yet, but I've been brought in that direction slightly. So I'm going to let that reflect in my predictions. Again, the prediction phase is the phase that you want to spend the least amount of time on. This is where people get it twisted. People spend the vast majority of their time trying to predict which way the market goes, and they try and say, oh, my prediction came true, so I made the trade, and so I made money. The prediction did not come true, so I didn't make a trade, so I missed out. Or, worse yet, I lost money because I didn't have a stop loss, or I didn't have a stop loss. That's really the main point. My friend, I love you. That's an area that I want to help you. Let us stop focusing so much on price predictions. They are useful. And I'm not going to sit here and say I'm never going to put price prediction in a title again, because I will, because you know what? They're fun. It is enjoyable to have some kind of idea about where the market's going to be, especially if we're looking 1, 3, 5, 10 years out. That is helpful, especially when you're looking at the very long term for the sake of investment, because then the price prediction starts to be more useful if you're talking about the actual number, not just whether it's going to go up or down, because you start to get an idea of what the gains are going to be on an investment vehicle. So that is more helpful with the investment side of things. With the trading side of things, it's almost just a little bit helpful. It's fun. It is a good thought experiment. So if these are our likelihoods that I'm going to go with of the market breaking in a certain direction, then what do we do with that? Well, first of all, if you're enjoying today's stream, I would like to ask you to hit that like button, smash the subscribe button, and make sure if you have not already to sign up for Lux Algo using coupon code JEB30. That's JEBB30 for 30% off at checkout. That's going to save you $20.40 every single month. If you use that and you get the annual plan, you're going to save over $400 every year. It's going to bring it from $818 down to, I think, $381, somewhere in there. You'll have to correct me if I'm wrong on that, but you're going to save, I believe, about $400 every year on Lux Algo by using our coupon code and by using the annual plan discount of 30%. So you can stack those and you're going to be very, very happy that you did. Also, make sure to sign up for Principles of Technical Analysis, where you'll learn everything about technical analysis so that you can use those principles of technical analysis in the 3 Ps and learn how to plan to profit in these markets. All right. A lot of people are asking, will it go up or will it go down? Again, doesn't really matter. What matters is to be prepared for both. I think it's more likely than not that Bitcoin will move to the downside, at least to its local bottom at 28,879 within the next week. But even if it doesn't, we'll be ready for both. So how do we be prepared for both outcomes? This is an area where I'm going to do the exact same thing that I did with the predictions. I have a model yesterday that I can go off of. I have 2 trade setups here from yesterday's analysis that I'm going to adjust. I'm not going to reinvent the wheel every time I need to put a new tire on my car. I'm just going to go buy the same wheel if it did me good the first time. Does that make sense? We try and reinvent the wheel instead of just adjusting the wheel that we had. We try and say, okay, well, my tire, I had a blowout after 15,000 miles. So what I'm going to do is I'm going to put a bicycle tire on my Toyota Camry. I'm going to put a bicycle tire on my 4Runner, whatever. I'm going to put a square wheel and see how that works. I'm going to do this thing that I saw on Discovery Channel 14 years ago. I'm going to put this like metal leg, and it's like this, and it bends, and it's springy. And, I see people in the Olympics using it, and they run on it, and it's really cool. I'm going to see if my car can use that. I'm going to reinvent everything. No, you don't do that. You say, okay, well, this brand of tire messed up, so I'm going to try this one that's a little bit more expensive, has a little bit better reviews. You adjust. You don't throw the whole system out and you reinvent it. You adjust because it saves you time and money, and it's also no point in reinventing the wheel if the wheel works just fine. That's why the phrase reinventing the wheel exists, because it's silly to try and do so because it works fine. It's good enough. Don't fix something that didn't broke. These two trade setups work fine, and they could use a little bit of adjustment with a day's extra price action, but they still work fine. Here's the adjustment. First of all, you already saw me adjust this trade, but it's pretty much going to be the same thing. If Bitcoin at this point breaks above, I would say probably its current level of resistance, then I would very conservatively try and trade a movement up to 29,700. But the issue here is I want to see Bitcoin setting candles on the hourly chart above 29.3. I don't want to catch one of these wicks. I want to see Bitcoin going through an actual gradual movement up here. Because at this point, I can't trust that that Bitcoin's just going to moonshot and put one green candle in place. So with that in mind, I'm going to do something a little bit different. I'm going to adjust. I'm actually going to move my entry a little higher, and I'm going to have a little bit of a higher stop loss. And the reason I'm doing that is because, first of all, the market has not proven to me that I can be confident in a movement right now to the upside, because that is the counter movement. The overall predominant trend is down. So you want to be much more conservative and have a much different strategy on the counter movement than on the primary movement. The primary movement's down, so we can be pretty confident that if the market moves down below its current local low, then it's going to actually mean it. In this case, if Bitcoin were to go to the upside, I'm thinking at this point that I can't trust that it's just going to put one giant green candlestick in play. It might do that, but I don't know if I can plan by that because it hasn't proven to me that it's going to do that. It's given me reason to believe that if it tries to do that, it's going to fail. We saw that happen here, 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 and here. 4 or 5 times it's done that. Long candlesticks that I don't want to get into. So I'm going to more try and bet on a slower gradual uptrend to 29.7, which is what we're doing anyway. So at that point, we can do 2 things. Either one, we can enter here and then we'd have a tight stop loss. I don't know if I do that. You could do that. You could enter right now and then have the stop loss below this uptrending level of support. That, to be honest with you, that's probably not a bad plan. Or you could wait until Bitcoin breaks up here above 29.4, try and get into an entry, and then have a larger stop loss because you may actually be seeing that ladder formation, and you don't want to get in here, get out here, and then Bitcoin goes to there. Hopefully that makes sense. So the plan I'm going to give you for this movement, it's probably an entry around 29.5. Go ahead and write out 29.5 right here in our entry. And again, this is just for educational purposes. I am not giving you these trades for the sake of you just going and copying me. I say this every time I show a trade on stream. Please don't just go and copy the trade. If you had have copied the trade yesterday, you would have gotten into the wrong trade. You know why? Because 12 hours had passed and you needed to update the trade, right? So please, I will scream it from the rooftops. Don't just copy the trades. I am not here for you to copy trade. If you're trying to learn, you're trying to make some quick bucks, fine, throw some money on a copy trader. That's a thing, and people make money doing it. I'm not going to knock it, but you're not thinking for yourself, and so you're not growing your mind, which is the thing that's going to actually bring you long-term benefits. Making $1,000 because you copy traded a very wealthy, very profitable trader didn't actually serve you anything other than making you $1,000. Much better to go make $100, but learn how to make $100 than to make $1,000 and have no idea how to do it. That's the more sustainable method. So please don't just copy my trades. Please take the principles. And yes, sometimes you might find, Jeb, that trade actually is pretty useful right now. I will just go ahead and do that. But for the most part, I just do it on your own. Use the principles. And that's why I try and speak in such a principled way so that you guys can go and replicate this. Again, I'm going to put an entry here around 29.5. The reason for that is because I think that would be up here far enough above 29.4, which is our current level of resistance. Actually, I take that back. See, I'm kind of adjusting this on the fly. I like to do this on the fly just to give you, because I want you guys to see my thought process. That's the point. I think I would actually put the entry price here above 29.4, even before we get to this uptrending level of support, because I don't know if this uptrending level of resistance, is going to really be relevant anymore. I'm going to put this at 29.430. That's going to be just above our current level of resistance. I'm going to have a relatively conservative stop loss, and that's going to be below 29.4. That's going to be 29. I'm going to call it 29,395, and I'll show you why in a second. And the take profit will be the same as it was yesterday. It's going to be just below 29.7, which is our next major level of resistance. We know that from the perception stage of yesterday's planning, because that's the level of supports. Those are the levels of support that are important right now. Reason for this: 29.4 has been established as our ceiling for this market. If we look back in history, I remembered something while we were talking. It also is the local level that we set as a bottom here on the 30th of June. about 29,450. So that's an important level, actually. So if Bitcoin gets above that, that's where I would probably start entering the trade. I think I would set up the trade around that flat level of resistance. I'm sorry, I've said support a few times. Around that flat level of resistance rather than around that uptrending level of resistance. So this would be the trade I'd go for here. Again, this is about we try and go for a 7 to 15x risk to reward ratio. This is a 7.14x risk to reward ratio. It's a little bit on the lower end, but of course we are trading the counter movement. So a lot of times they are going to be smaller risk to reward ratios because we can't be as confident in these movements because they do signify a total market reversal, which has not yet been confirmed. This is the kind of trade I would go for. Again, the principles here are we'd be breaking a local level of resistance, our current ceiling, trying to move up to the next ceiling. So I'm going to put our trades around those two levels. Our exit is going to be right below the next ceiling that we would probably go up to. The entry will be right above the current ceiling. The stop will be right below the current ceiling. By doing that, you have yourself a 7x risk to reward ratio, and you trade the movement from this trading range to this trading range. All right, so we'll kind of move on pretty quickly from there because, again, that's the less likely scenario of the two. So adjusting from yesterday, I'm going to leave this trade here. I'm not going to touch it at all, and I'll show you why. I'm going to leave this trade exactly here. I think it's a great trade, and if the market falls down here, that's a trade I would probably want to go by. But the market's moved far enough away from 28,879 over the last 24 hours that I think we should probably put one in between there. So what I'm going to do in this case is I'm going to look at the market and I'm going to say, what's the current support? The current support sits right here. It's this uptrending level of support. And then, of course, we have our current local bottom at 28,879, which would, falling below that, would activate this trade. I'm going to put another short trade here. And again, I think there's a good likelihood that this could end up getting activated. I'm going to wait for three confirmations. One, I want to wait for Bitcoin breaking below the uptrending level of support. Two, I want to wait for Bitcoin breaking below its current bottom at 29,172. And three, I want to wait for it to break below its current former bottom at 9 o'clock p.m. yesterday Eastern time at 29.1. So I'm going to call 29.1 as the level that I'm going to start setting my trade up around. Now I have my floor. Now I have the next floor below it. And again, just as we did up here, we're going to set up our trade with both of those levels in mind. It is easier to try and go for a flat level of support, but sometimes you'll have to set this up with the floor being a flat level of support, the ceiling being a trend line, or vice versa. In this case, it works out that I can do this with a flat level of support at 29.1. So what we're going to do, we're going to put the entry a little beyond the floor, the stop loss a little before the floor, and the exit a little bit above the next floor. Using our principles of trading, that'll give us roughly a 5x risk to reward ratio. We can kind of adjust this a little bit. And I'll say here that if we enter the level that we're working around is 29,116, we'll put our entry around 29,100. See how that works. Yeah, we'll put our entry around 29,100 because that means that we would be falling below this level. That would indicate quite a bit of bearishness. We're going to put a stop here. I want to give it a decently wide stop loss. So I'm going to give it probably 29,100. Probably 29,135. Somewhere around there. It's going to give a pretty big stop loss. And when I say pretty big stop loss, understand that's a $35 stop loss. And I'm calling that a pretty big stop loss. The exit down here, I'm pretty much going to call it 28,900. Probably 28,925 even. Oh, I'm sorry. I am running in the wrong direction. 2,900. Let me just go ahead and grab 2,900. 29,000. Not 29,000. I'm sorry. I'm moving in the wrong direction. 28,875. Let's try that. Yep, 28,50. 28,850. Sometimes you got to fiddle with it a little bit. 28,825. Nope, I'm going the wrong direction. 28,900. All right. Somewhere right around there. I'm going to move it down to about 28,890. Looks like that's what I'm going for. Okay. 28,890. That'll be our exit. That'll give us a 6x risk to reward ratio. There's a lot of sibilance in that sentence, as well as in that one. That is a lower in risk to reward ratio, but there are two trades here that you would ladder into. Notice, as you get to the floors, you kind of exit the trade and wait to see if the market's going to keep going. And if the market keeps going, then boom, you got another trade set up. And you pretty much just set these on top of each other, going up and going down. And if the market moves, then you activate one of them and you make money. It is not that complicated. It has been made out to be complicated on YouTube, and I've been guilty of that myself. But it is actually relatively simple. And so that's what I want to show you guys, is how to profit in the markets. And I also want to show you guys how to profit in the investment side of things, because that's where I put most of my focus in. Just full transparency, that's where most of my focus is in the investment. I don't do a lot of day trading. I know how to do it. I know how to teach it, but that's not where my focus is. My focus is on the investment. So I also want to be able to show you, here's how you focus on the long-term investment. If the market moves down, I've given you an example of how you could move and trade in that market. If the market moves to the upside, I've given you an example of how you could profit in that market. And again, take the principles. And yes, if you want to, you can maybe take some of the numbers I use, but ideally take the principles and apply them. If Bitcoin moves up or down, and it will probably do one or the other when the CME futures, when the effective federal funds rate news comes out today, you should be prepared for both scenarios. I hope that was helpful. Tell me in chat if it was. Thank you guys so very much for tuning in. Let's go ahead and read some chat. Thank you so very much for tuning in. Teach a man to fish. Exactly. That's exactly what we're going for here. It's exactly what we're going for here. I don't mind giving out fish, but I much, much, much prefer to give people an education in how to fish. Lux Algo is too pricey, Master Jeb. Wish I had. Haha. Brino Silva, here's the cool thing. If you go to Lux Algo and you sign up for the annual plan and use our coupon code and you stack them, you're going to save 70%. And that will bring Lux Algo's price down to $28 a month. I did the math one time. That is $1 a day. So just think about all those infomercials, all the things that at 3 o'clock in the morning you were up because you drank too much caffeine in the afternoon. Been there, done that, got the postcard, and you're watching the infomercials, and you hear, for just $1 a day, you could save kittens in Nairobi. For just $1 a day, you could save for retirement. For just $1 a day, you could buy a boat. For how many things could you do for $1 a day that are maybe useful, maybe charitable even, and a lot of them are good things. I mean, you can do a lot of good for $1 a day, but how many of them are wastes of time? Also, for $1 a day, you can have a life insurance that you will never get any payout for because they've got 30,000 pages of exceptions. For just $1 a day, you could save $1 a day. For just $1 a day, you could have Lux Algo if you use that coupon code. So I'll just go ahead and pitch you with the same sales pitch. It is useful, and it will help you, and it does run about $360 in a whole year if you use our coupon code and the 40% savings from signing up for the annual plan. And then what you can do if you're using a budgeting app like we have in Mint, there is a way that you could set a specific budget for that, and you can set it in Mint. And I'm not going to switch to it, of course, because it's our personal finance, but I'll see if I can go in here really quickly and figure out how to do it. For any of you guys who don't use Mint, I have no affiliation with them. I would love to have an affiliation with Intuit Mint at some point in the future, but they are great for budgeting. We're using them. Very, very helpful. But if you're using Mint or some other kind of budgeting software, you can set it. We do this one with our car insurance because we pay it in 6-month increments because it saves money. It's cheaper. Why not do it? Just figure out how to make the budgeting work for it. There's a way that you can go into your budgets. I have it for our car insurance. I'm actually going to look at this. And on our car insurance, they have this question. Again, I'm not going to show this because this is personal finance. I'm not going to show this on stream, but it says, when will this happen? This is our auto insurance budget. When will this happen? Every month, every few months, or once? You set it up for every few months, and then it says, I spend X amount of money every X amount of months. My next payment is December 2023 for us, is when our car insurance will renew. I spend $360 every 12 months. Boom. And so what that'll do is it'll put a line item in your budgeting software. Pretty much every budgeting software is going to have something like that. It'll put a line item in your budgeting software where it'll account for $30 a month. And then at the end of the year, you'll have $360 in your account, and it treated it as if you were spending $30 a month. It's actually $28 a month for Lux Algo. It's $28.40 or something like that. And then the money will be there every 12 months to buy with that coupon code, and you will save yourself $400, and you'll get access to Lux Algo. And for $30 a month, you make one trade with that sucker, and it's going to pay for itself if you got any kind of reasonable trading portfolio size. It is very, very helpful. So again, $1 a day, you can get access to Lux Algo. So for $1 a day, you can also help to support our channel. I really appreciate all of you guys who have signed up for Lux Algo because it is helpful for us. All right, we've got some interesting things going on in chat. Financial sovereignty for $1 a day. Yeah, you're gonna need a little bit more for building wealth, but you can be financially sovereign with $0, believe it or not. Now, financial sovereignty for 99% of you should lead to a lot of wealth building, but technically, the definition of financial sovereignty is being in control of your finances. And if you're called to give them all up, then you better do it. And that's the financially sovereign move, as the man in the parable. Actually, it wasn't as a parable. It was actually just in a story was told to do. He didn't do it, and he did not walk away from that financially sovereign. All right, guys. I hope that was helpful. Thank you guys so very much for watching. Thank you guys so very much for watching. Definitely, like I said, also stay tuned because we've got a lot of cool things going on that Got some very interesting things in chat. We got some very cool things going on behind the scenes that I'm going to share with you guys relatively soon. Can't wait for that. Right now, I am going to go, and I will be either putting up a video or going live or doing something at 2 o'clock when the CME futures drop. I decided against making a Climate of Crypto episode for our 11 a.m. slot today because we were having that news, and frankly, putting a video up would have been outdated in a couple of hours. So I will probably either make a phone video or I might go live for the decision. So we'll see about that. Looking forward to seeing you guys over the rest of the content coming out today. Make sure to subscribe to the channel if you haven't already. Sign up for Lux Algo and Principles of Technical Analysis with the link in the description box down below. I'm going to go, but before I do just first want to thank each and every single last one of you for watching, as always, and I will see you guys in the next video. Peace.
Oh, I got a real good feeling.